shit coins flipping Bitcoin. That will never happen. Thanks for playing. Good game. You got fooled. But no, guys, what we've talked about on this show over and over and over again is a monetary regime change.
This is irrelevant. Bitcoin isn't competing on smart contract functionality or high throughput. It's competing as a monetary instrument, a neutral, global, apolitical store of value. In his view, nothing in Ethereum's design makes it a better monetary reserve asset than Bitcoin. He even goes so far as to call Ethereum an utter and complete scam compared to Bitcoin's mission. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
What do I mean by the real flippening? Well, in Bitcoin, there's a term coined by Coinbase called the flippening. I kid you not, I swear to you. The flippening refers to a potential future event where Ethereum's market cap surpasses that of Bitcoin. The term was coined in 2017 based on Ethereum's flexibility and its ability to support decentralized applications and smart contracts. While Ethereum has surpassed Bitcoin in some metrics, God, these guys are such fucking scammers, such as transaction count, the flippening, in terms of market capitalization has not yet occurred. So this is Ethereum. That's that 2017 blip on the far left. And this is it since. An utter and complete scam, an utter and complete shitcoin. Shout out Coinbase for really showing what not to do when it comes to championing Bitcoin. It's really astonishing. I couldn't ruin my credibility like they have, even if I tried. So I say the real flippening because to me, the real flippening is a neutral reserve asset flipping US Treasuries as a central bank reserve. Not any of these shit coins flipping Bitcoin. That will never happen. Thanks for playing. Good game. You got fooled. But no, guys, what we've talked about on this show over and over and over again is a monetary regime change. The post-$71 is over. The post-$71 was the creation of a piece of paper that was backed by nothing, was redeemable for no neutral reserve asset, was redeemable for nothing that was governed by Mother Nature, by the universe, by the laws of physics. And that countries were to repatriate the dollars that we would print and hand out back into our country by buying our debt. That's these US Treasuries. And you can see now gold, which has been bottoming out ever since the divorce from the gold standard in 1971. So you guys can see gold at its peak right there. It's looked like 1980, but in 1970s, 1980, gold was held as a reserve asset by central banks. It plummeted all the way down to, 10%, low or high single digits. And now gold is on its way, I think months away, based on price action and the level of stacking from central banks, where we will have a neutral reserve asset back as the bank reserve asset as opposed to debt from the US government. This also comes on the back of the UK 30-year bond. So these long duration pieces of trash that nobody wants to own. UK 30-year bond sale receives fewest orders since 2022. Yikes, that's not good. Bloomberg writes, a UK government offering of a 30-year debt saw the lowest total orders since 2022, highlighting waning demand for long-term gilts. Bids worth £4.6 billion, or $6.2 billion, were placed for the debt management office's offering of £1.5 billion of gilts due in 2056. Can you imagine getting a fiat-denominated payout in 30 years? While that meant the sale was still more than 3 times oversubscribed, the auction size was unusually small, with the lowest amount of sale in 3 years. That small size is part of the UK's plan to cut back on longer-term issuance as demand from steady buyers such as pension funds dries up. Tuesday's outcome will offer some vindication to the DMO's strategy. So guys, here's the deal. What we're living through, this era we're living through, and why I called it rocks are outperforming bonds, is because we are, and I'll repeat it every single Monday, that's what you guys are spending your time with me for, is to hear me say the same goddamn thing. We are moving back to a neutral reserve era. We are moving towards an era where monetary instruments are going to compete for who can sustain, persist your time, your energy, your effort, your labor the best. Who's the scarcest? Who's the most portable? Who's the most divisible? Who's the easiest to verify? Who's the cheapest to send? Who's the easiest to receive? How much does it cost to store it? Open competition, because the days that governments can trick people into buying their debt are over.
So where does Bitcoin fit in? Mallers explains that the US government is already pivoting. It's no secret that traditional treasury auctions can no longer sustain US debt. Instead, Washington is eyeing a new buyer, the stablecoin market.
And by the way, the UK struggling to sell its own pieces of trash bonds, they're the biggest buyers of our pieces of trash bonds. If the UK can't sell their own bonds, how the hell are we going to sell our bonds? This is treasury held. You've got BRICS, you've got Japan, you've got BLICS plus the UK. Japan's been about net flat over the last 20 years. BRICS down. Look at post-financial crisis. Leading up to the US financial crisis, or the global financial crisis rather, BRICS were adding to their treasuries. As soon as that happened, and they were proven to be a complete and utter scam, it's when everything changed. China, Russia, net sellers, stacking gold. The only net buyers, we've talked about this all the time, guys, the Cayman Islands, the UK, our own banking system. Cayman Islands, because that's where all the hedge funds are domiciled. Everywhere that has a tax advantage jurisdiction. The Cayman, Irish entities, like US tax haven, Ireland. Then our own banking system, we allow substantial leverage, uncollateralized leverage, to our own domestic banking system so that they can pile in to these long duration pieces of trash. That's what tripped up Silicon Valley Bank. Nobody wants bonds. That's your introduction to the show every single week. Nobody wants these pieces of crap. And everyone is moving towards scarce assets. Now, just want to remind you guys what the United States plan is to address this, because it's no secret at this point. It is unsustainable to finance the United States through the traditional treasury auctions. There's not enough demand for US debt. Everyone is rotating out and into gold and Bitcoin primarily. Global neutral reserve assets governed by the laws of physics that operate within the rules that are Mother Nature. Can't make them out of thin air. Can't just take them out of someone's pocket because you don't like what they believe in. You understand? So the US is turning to, in part, stable coins. So this is an old tweet from Besant, but I want to resurface it given the context. Recent reporting projects that stable coins could grow to $3.7 trillion by the end of the decade. That scenario becomes more likely with passage of the Genius Act. A thriving stablecoin ecosystem will drive demand from the private sector for US Treasuries. There it is, guys, which back stablecoins. This newfound demand could lower government borrowing costs and help rein in the national debt. It could also on-ramp millions of new users across the globe to the dollar-based digital asset economy. It's a win-win-win for everyone involved, the private sector, the treasury, consumers. These are the fruits of smart, pro-innovative legislation. So again, just a reminder, the US government is trying to find a balance sheet they can repress, trying to find a balance sheet that they can sell their debt to. And their answer is stablecoins. And this, in my opinion, and I know a lot of you in the comments are like, I don't understand what you're trying to say. I don't get this. How is this benefiting Bitcoin? Stablecoins and Bitcoin grow in tandem. The fastest way to grow stablecoins is to grow Bitcoin. Okay? That's the Tether and Bitcoin have a ratio of somewhere between 2.5 to 10x. The Bitcoin market cap Bitcoin is substantially larger than stablecoins, and the fastest way to grow stablecoins is to grow Bitcoin itself. And so the US is going to try and solve this problem by growing what they call the digital asset economy, by, quite frankly, finding new treasury buyers by growing the de facto trading pair to Bitcoin. So TLDR, nobody wants bonds. They're going to try and save it with stablecoins. Tremendously bullish for Bitcoin. Gold is flipping treasuries. We are officially, I don't know how else I could put it cleanly, we are officially entering a new monetary era. And this graph here, guys, literally shows it. It is no longer hypothetical. You're no longer listening to the crazy people on Twitter. It is literal central bank reserve assets. Gold is flipping treasuries as we speak.
Mallers argues this is why the U.S. is promoting digital asset economies and pro-stablecoin legislation. But here's the twist. Stablecoins and Bitcoin are deeply intertwined. The fastest way to grow stablecoins is to grow Bitcoin. The two rise in tandem because stablecoins serve as the primary trading pair for Bitcoin. In other words, the U.S. government's attempt to solve its debt problem may end up supercharging Bitcoin adoption at the same time.